Hello, my name is Victor, and in today's video, I want to talk about two specific stocks in a head-to-head format. And those two stocks are Shopify and Amazon. We have a lot to get through, so let's not waste any time. Let's get right into it. But before we get going here, I would highly recommend, if you have not checked out my previous video, I went into a deep dive of Shopify's income statement, balance sheet, and cash flow statement. So just an overall in-depth video on Shopify, which I think would be tremendously helpful to you in understanding where I'm coming from in this video. So I'll leave a tag up here for you if you want to check it out, and then come back to this video when you're done. But if you're here strictly for the head-to-head format against Amazon, know that I'm going to judge each stock in 5 separate categories. And those 5 categories are their year-to-date or volatility performance. Second would be a PE ratio analysis. Third, we have revenue and profit growth rates. Number 4 are my personal projections after doing plenty of research on each stock. And last but definitely not least, number 5 is going to be free cash flow. I hope you're as excited as I am, and we're going to get started here with each stock's year-to-date or volatility performance, because I think it is incredibly important to keep in mind whenever you are thinking about investing into a company. How volatile is the stock? And when we have a look at this chart, which has Shopify and Amazon, you can see that there has been a similar pattern between the two at the start of 2026. But one stock does come out ahead right off the bat, and that is going to be Amazon, which is still down for the year in 2026, but nowhere near as much as Shopify. And I can tell you from personal experience from being an investor in both of these stocks, Shopify is definitely a much higher volatility stock, and that's just something that comes with the territory. That doesn't necessarily mean that Shopify is a worse stock right off the bat, but for this particular category, I do have to give the win to Amazon, who is down about 9% year to date compared to Shopify's almost, what is that, over double of that, down 22% year to date for Shopify, as you can see by the blue line here in the graph. Category number 1, we have Amazon coming out as the winner. The second category that we are going to pit each stock against is going to be in a PE ratio comparison. And I'm going to be looking at 3 specific ratios here with each stock here: the trailing PE, the forward PE, and I also wanted to include a PEG ratio because both of these stocks are high growth companies. So I figured that it would be reasonable to also look at the PEG ratio because both of these stocks have been growing on the top line at least by double digits over the last couple of years. When we have a look here at the trailing PE ratio for Shopify, we can see that Shopify trades at a tremendously high ratio. Trailing PE is 133. When we have a look at Amazon's trailing PE ratio, it is nowhere near as high, sitting at 29 currently. Moving on to the forward PE ratio for Shopify, they are at a 55. When we have a look at Amazon's forward PE ratio, they are currently at a 13. And the final category here for Shopify, we have their PEG ratio at 2.1 and Amazon's PEG ratio at 0.65. So right off the bat, I think we have a clear winner here, and that is going to be Amazon. Their forward PE ratio is much more reasonable compared to Shopify's, but I think including the PEG ratio really helped me to categorize the winner here, because as we have discussed here on the channel, I want to see a PEG ratio that is 1 or less than 1. So Shopify being well over double that is not something that I really wanted to see here. But when I had a look at Amazon, you can see that they are exactly where they need to be in that zone between 0 and 1. So again here, we have Amazon with a second category win and getting an early lead here in the video. Let's see if Shopify can get it together here, because right out of the gate, we have Amazon coming in strong. And I also want to take this moment, and if you are enjoying the video, be sure to give me a like. It helps out tremendously. And a massive thank you to all of my subscribers. We are about to hit 50 subscribers here on the channel. And again, I just want to thank every single one of you for all of the love and support. The third category that we have is going to be revenue and profit growth rates. And I do want to highlight here that I am looking at the compound annual growth rate over the last 2 years. But I also didn't want to only include 1 year because I didn't think that was enough data to go off of. Can you hear that little bird chirping his little heart out? He is so loud. But keeping it moving here, we have Shopify's compound annual growth rate over the last 2 years at 28%. Incredibly strong top line growth for Shopify. And when I had a look at Amazon's revenue growth over the last 2 years, that sat at 12%. So Shopify, incredibly strong top line growth compared to Amazon. But let's see how the net income looks for both of the companies before I make a decision here on my winner of this category. But when I did have a look at the net income, Shopify again came in incredibly strong. Their net income over the last 2 years on a compound annual growth rate is over 200%. Amazon, in comparison, was still incredibly strong, up 60% over the last 2 years, but completely blown out of the water here by Shopify, who is growing at a tremendous rate. So Shopify has to be my winner here in this category and finally gets on the scoreboard here in our head-to-head competition. The fourth category that we are going to discuss, and that is going to be my personal projections based off of my research. And again, this is going to be a compound annual growth rate that I have projected through the end of 2027. And I also have a little caveat here because Amazon's projections are based off of numbers that I ran a couple of months ago. It was late last year in 2025. I didn't think that the numbers would have changed too drastically, especially since I did it maybe like 3 or 4 months ago, but something to consider. And if you did want to check out that video where I ran those projections, I'll have a tag up here for you as well. But I'm going to break down this category by giving you my bear case for both Shopify and Amazon, and then I will also give you my bull case for both of the stocks as well. And then I'll make a decision on the winner based off of those two very important factors when it comes to projections. So let's get started here with Shopify. And in a bear case scenario for Shopify, that would be at a 70 PE ratio through the end of 2027, I would have a compound annual growth rate of 19%, which is amazing when you stop and consider that the S&P 500 on average gives you about a 7 to 10% return every single year. So for Shopify to have such a strong compound annual growth rate in my bear case, that is amazing. And when I had a look at Amazon, their bear case was at a 20 PE ratio. Remember again that we just went over the PE ratios in, what was it, the first or second category? So keep in mind, Amazon has a much lower PE ratio compared to Shopify. So their bear case, I have them at a 20 PE through the end of 2027. And if this were to happen, I would actually lose money in Amazon because I had that compound annual growth rate at -7% over the next 2 years. We're not going to make a final decision here. Let's go ahead and move on to the bull case for both stocks because there might be a bit of a transition or there might be a surprise here before I declare the winner of this category. But continuing on with the video, let's move on to Shopify's bull case. And in that scenario, I would have them at an 85 PE ratio by the end of 2027. And this would provide me with a compound annual growth rate that is a staggering 27% per year. When I did the same calculation with Amazon, I have them at a 40 PE ratio in my bull case. And in that scenario, Amazon would provide a compound annual growth rate of 31% per year through the end of 2027. So both of these stocks, like we mentioned, are growth companies. When they come in strong and demolish their numbers, Wall Street pays attention, and that is exactly why these stocks have been known to just shoot up in price, especially after earnings. I had to make a decision here based on the category being my projections, and while both were incredibly strong in my bull case, I think that the factor that I had to consider was that in a bear case, Amazon would actually lose me money over the next 2 years. Whereas I feel like Shopify, even in a bear case scenario, would still make me a profit in my portfolio. And for that reason, I have to give this category to Shopify. And if you're paying attention, you will be incredibly excited, just like I am, because we have Shopify coming from behind to even the score. We are now at 2 wins for Shopify and 2 wins for Amazon. So our fifth and final category here will determine the winner of which stock I think is the better buy at the start of 2026. And the final category that we have to discuss is free cash flow. And for the free cash flow category, I have 2 separate factors that I'm going to consider here. Number 1 being, of course, the free cash flow amount. So what is that in a dollar amount over the last year? But also my second factor that I'm going to consider is the free cash flow yield, so that I can see what percentage of the entire company is making its way towards free cash flow for the company to do buybacks, pay down debt, dividends potentially in the future, although neither of these companies currently pays a dividend. But knowing what percentage of the company is that free cash flow yield is incredibly important to me compared to just the base dollar amount that they have available on the cash flow statement. But okay, without complicating things any further, Shopify's free cash flow over the last year I have at $2 billion. And their free cash flow yield I have at 1.4%. For those of you who are new, you generally want to see a free cash flow amount increasing over time. So obviously the more free cash flow, the better. And you want to see a free cash flow yield that is around 7% is what is considered good. Higher than that, and you are doing great when it comes to managing that cash flow. Anything below that, and you have some room for improvement. But Shopify is definitely not at that 7% yet, but they have been improving at least over the last 2 years. Now let's have a look at Amazon's free cash flow amount, and that is a whopping $7.7 billion over the last year. So much higher compared to Shopify, but when I had a look at Amazon's free cash flow yield, that was a measly 0.35% when you compare that free cash flow amount to Amazon's entire market cap. So while yes, Amazon has much more money, available, you also have to keep in mind that they are using pretty much all of that money for CapEx spend, especially when it comes to AI chips and AI warehouses. And with that being said, since I have to consider that Amazon's CapEx spend is going to be $200 billion, which could potentially decrease their free cash flow to a negative amount through the year and potentially into next year, because who knows, they might increase that CapEx spend again in 2027. Taking that into consideration, and also that Shopify has been improving that free cash flow yield since last year at the very least, I'm going to have to give this category to Shopify. In a come from behind victory, I have to give Shopify the win here with a score of 3-2. While both are incredible companies, Amazon, by no means is a bad company just because they lost this head-to-head competition. I just think that there are several factors that you have to consider, with cash flow and CapEx spend being something that even Wall Street is starting to worry about when it comes to Amazon. So it is something retail investors like you and I also have to stop pause, and analyze before we make a decision. But a massive thank you to everybody who has made it until the end of the video. Be sure to give me a like if you enjoyed this head-to-head format, and let me know, is there another competition between two stocks that you want to see? Leave it in the comments below. A massive thank you to all of my subscribers, and as always, I'll catch you in the next one. Peace.